Oh, is it not working out there? So that might be catching up there. Sorry. This stupid YouTube. We'll start over. So this silly YouTube thing makes you press go live again for some reason. Anyways, let me give you some of the stats real quick and then we'll dive into the markets there. So I was going over the stats of the overall stock market for the month of October. You got to go back to 1997 to find the last time where the stock market was higher by 20%, and that's it, really. You got to go back to 1997 to find that. So being up 20% year to date, a big deal, right? So I just pointed out, I'll go over it again, but the stock market actually pulls back an average of 1.22% going through the month of October. And so I was talking about all the previous Octobers where you've got the crash of 1929, you've got the 1987 crash in, it happened in October, Black Monday there. And so you've got a lot of these negative, very negative performing months in October. October tends to be the most volatile month out of all the months. September tends to be the biggest losing month, by the way, but October tends to be the biggest, most volatile month in terms of markets wiggling back and forth. We'll cover all of this in our update for our clients there, but all in all, you know, we've got expectations of volatility coming up. I was also pointing out the idea of volatility in the overall market. So I'm going to go through the different sectors here with you today, and I want you to notice this sort of coiling up in the overall markets. Before I do that, though, I was talking about...
Hey, wait! Before you go watch one of our other great videos,
he's way off track today.
Have you had a chance to see our new
Before we do that, I was going to talk about the
healthcare
healthcare stocks. So that was your biggest mover last week to the downside. Notice the recovery here today up about 1%, and communication services also the second biggest mover to the downside, and so that a little bit nasty there. Got tiny recovery, but we know most of that was because of Facebook, so not much to worry about there. Commodity-wise, crude oil was your biggest mover last week. Heating oil and natural gas being in there. We don't talk about those much. I could talk about that more if you'd like, but really don't point out those sort of things. Here's the S&P 500. We'll pop that up on the charts to start to illustrate this coiling up effect in the market. This is not a good thing, by the way, when the markets do this. So even though we're at highs, look at the markets here over the last few days with really no bias, no guidance, no anything to go on. We've got the start of earnings season sort of unofficially kind of coming through here, but really nothing to go on. As I go through the individual sectors here, you take a look at something like retail. It's been coiling up the last few days, right? And by coiling up, I mean price action just tightening up where not much is really happening there. So if you look at the XRT, that's one way to look at it. I did point out healthcare. Oops, there you go. Healthcare overall, just not much going on. It can't seem to find any real direction. Even in the super short term here, semiconductors just sort of coiling up at highs, trying to figure out what the next big move is going to be. Markets and sectors don't like to be indecisive. They like to be trending higher or trending lower. There should always be something moving the markets. When they start to go sideways, you get people making decisions that they wouldn't normally make, right? If the markets are moving higher, you have normal greed taking place. People deciding to sell somewhere along the way and people deciding to add more to winning positions. When the markets fall and you have fear taking over, that tends to be a little more exciting, but you have the market sort of selling off, people deciding to take stop losses, and people along the way saying, you know what, that's a discount. I'm going to go ahead and buy some of that. Well, when the markets are sideways, you have people backing off and they lose patience because the big investors out there can't afford to let money sit, right? If you're a fund manager or you manage some division at, say, Morgan Stanley or something, you got to do something with the money. If you're a portfolio manager, you can't sit back while everybody else is actively doing work. You can't sit back and say, well, the markets aren't doing anything. What do you want? You very quickly are going to lose your job and somebody else is going to take over. So the big money that moves around does not like the markets to sit sideways. They tend to make some big decisions there. Speaking of big decisions, old JP Morgan cut its outlook on the U.S. markets today. They said that the stock market is now entering the last phase of a bull cycle. It's positioning itself in the last phase. I believe that was their actual words there. Anyways, as we keep looking here, you've got a lot of these sectors where I could almost skip them for the day. We almost don't even need to cover them because not a whole lot has happened. Here's the REITs, very strong, but still kind of coiling up at highs, not really doing anything. Not really a good thing, so I expect we'll be talking more about that as we go. Price of oil, backtracking here through the trend line, just driving people crazy. If you're an oil trader in the short term, wild price action. Well, you had the attacks, of course, and now you had Saudi Arabia come out, and they basically said, we've restored 11.3 million barrels a day back to production. But the attack knocked out 5.8 or 5.7 million barrels. So I'm not really sure on that one. I didn't get a chance to look too deep into that. How did they restore more production than what they had? Or are they just saying we're going to play catch up now? Either way, that comment coming out of the OPEC nations over there, well, mainly Saudi Arabia, pushed the price of oil down 3% on the day. So anything that you have oil related, if you're in that space, you saw a little weakness today, your OIH, your oil service stocks, Explorers, the XOP down just a little bit. Could have been a lot worse, really. Any commodity-based ETFs also lower on the day. Here's the DBC, which includes a little bit of everything, but this was down about 1% on the day. If we go over to silver and gold, so more weakness there. Silver continues to pull back, aggressively pulling back there, by the way. Gold broke through the 1,500. Well, let's just look right at gold. Let's just go there. There we go. Gold breaking through the 1,500 price area there and the 50-day moving average. So you have a major support area people are looking at. That's just a lot of people throwing in the towel here for the short term. So gold pulling back aggressively on heavier volume. Home builders did well today, hit new highs, up 1.25%. And rates didn't really move a whole lot. Rates also coiling up, if I could focus on that. The past few days, we've been talking about this back and forth, push and pull sort of thing. And just not much action there to cover. Semiconductors, we talked about that. So in general, is a little bit higher today. Semiconductors adding 1.15%. Goldman Sachs added Taiwan Semiconductors, ticker symbol TSM, to their conviction buy list. And this is currently the largest holding in the SMH. It's about 12%. It's not, Intel's the second largest at like 11% or something, but TSM, currently the largest holding, up about 2% on the day. So that helped the semiconductors. And if you happen to be following along, instead of playing individual stocks in China, like Baba and Baidu and stuff like that, the FXI is a way to play Chinese large cap stocks. That recovered most of what it had lost the other day. So just a little bit of recovery there from the confusing White House news that came out. If I didn't get that on the recording here, the White House came out over the weekend and they said, we are not looking at delisting companies. We're not talking about that. But then today on TV, Peter Navarro came out and said that was at least 50% fake news. So he kind of left the door open there. Didn't really solidify anything. Probably using that for negotiations that start coming up soon here with the Chinese delegates that are coming over, the big dogs too, the guys that actually can make decisions starting next week, I believe. All right, so that's that one. We'll cover a few stocks here and then put this thing to rest. Apple, one of the story stocks today as far as being higher on the day and being talked about a lot on Bloomberg, CNBC, and the like, up about 2.33%. JP Morgan raised their price target to $265. That puts it off the charts here. $265 from $243, getting bullish on that one. The average price target's $224. So we're basically there for the average price target. A lot of analysts making their decisions. This analyst is 55% accurate with a 2% gain on about 55 calls. I looked at the best analyst just to see where he stood. 235 is his price target, which is still up here. Got a little bit to go. He is 69% accurate with a 24% gain on 272 calls. Not bad. Also, 223. This should put Apple back above the $1 trillion market cap, does it? Someone can do the math for me there. 223, I think they got 4.5 billion shares. Is it 4.5 billion shares? You take 4.5 billion. I think that's like 1.13, 1.16, 4.54 billion. Yeah, that puts it over $1 trillion. I don't know about how much, but I know that'll do the trick. Microsoft's still the biggest one. Microsoft is like 1.86 trillion or 1.6, something like that. So still the biggest one out of the group. Anyways, moving on. Bed Bath & Beyond, BBBY is the ticker symbol. That was one of your bigger gainers today, added 7.5% coming off the lows here. Wedbush says their earnings are going to stabilize here in the next 2 years. They're about to turn the corner. So price target of $16. That's ambitious. I think that's pretty, but that's over 12 months. So he's shooting for $16. Average price target's $14.50. That puts you right about here. This analyst that made this call, 52% accurate, got a 7% gain on 108 calls. Okay. Yeah, I'll leave that to you guys to decide. Las Vegas Sands up another 1% today. Remember, they're taking over for Nectar Therapeutics in the S&P 500. So actually, there's a lot of changes in the S&P 600 too. A lot of adjustments going on there. But Las Vegas Sands on Thursday will be joining the S&P 500 because Nectar, which we covered on Friday, poor guys, it got the raw end of the stick on that one. But they're getting booted. All right, you got 65% of the S&P above the 50-day moving average. It was 59% on Friday. Remember, there are a lot of stocks right around that 50-day, so that number is going to be pretty volatile there. The S&P remains above the 50-day moving average, which is good there. You had 18 new 52-week highs today. A decent amount of them were utilities, not as many as we've seen. Nike, which we could point out if you're Nike fans. We actually own this in a couple of our portfolios here. So Nike, after the earnings announcement, just continuing with its sort of sloppy breakout that it saw from earnings. We talked about this one last week a couple times just to share that with you. And you also still have some of the defensive names in there. Dollar Tree hitting new highs. But look, see how we kind of talked about this one not taking off. It's not going to be a rocket ship. It's got to settle in there just a little bit. It's trying, though. You can see it's trying. It's just not doing it. And Procter & Gamble hit new 52-week highs, just steadily moving higher there. Our stats play. We've been watching Netflix. Today was the very last day that it had to gain the 1.8%. I believe that'll do the trick today. Does it not do the trick? I think it came very, if it didn't, it was within a fraction of a percent of hitting it there. But nonetheless, we're out of days. So if you participated on that one, well, I'm not allowed to really say things like that. But it had a 67% chance of gaining 1.88%. Looks like it did it, or very, very close. Honestly, if you own it, I don't see any reason to sell it. So, I mean, it's recovering, it's doing everything that you would expect and the statistics have expected. So even though you're going into day 6 or 7 or whatever, I still don't see a reason why you'd run away. Got a new one for you if you're interested. Advanced micro devices. This one will be interesting because this is a pretty tricky area. 64.6% of the time when it finds itself in a position like it is right now, it is higher by 2.09% in the next 5 days. That's asking a lot, in my opinion, but let's see. So from here, we got to get right about there, 2961. So I'm going to draw that out. 2961, sorry to take an extra second here. Let's just draw a line. I like having fun with these here because it's something to look at. So I think that's a little ambitious, really, but the stats say 64.6% of the time we should get there. All right, so that's what we have in terms of our statistics and everything. WeWork officially pulls their IPO for the year. They're gonna go public. It's just, we talked about this probably too much. They're just following the same game plan as Uber. They're doing the exact same thing as Uber did, getting rid of the CEO or the founder, putting someone more stable in place. You got to give that guy some time to go on all the TV and everything and build a little reputation, and then he'll take the company public after making some changes that make the company look a little more, well, anything better than what they currently look like on paper. So that's that one. If you like earnings plays, we're going to start creeping in some more of these here. We're slowly getting there. You got Stitch Fix reporting earnings tomorrow. This one will be interesting. So Stitch Fix reports tomorrow expecting 4 cents a share. Remember, they guided higher. So they've beat on earnings every single earnings announcement. Now, they've only had 7, right? So they're a young company. 7 earnings reports. They've beat on earnings on all 7 of them. And they guided higher. So they told us to expect more coming into this current quarter. Last quarter, sales were up 29% because they had 17% more active users on the platform there. So they were the ones that said, look, expect more out of us. So we'll see what happens there. And they raised guidance on the last 2 quarters there out of the 7. So we'll see how that goes. Stitch Fix to report tomorrow after the close. So we'll get a chance to check that out if you're interested in that or happen to own it. We got 3 Fed members speaking tomorrow. This continues the sort of track of Fed members going out there and speaking, right? Everybody's paying attention. More and more of them are giving speeches all over the globe, actually, tomorrow. Frankfurt, Germany. You got AI conference over in California. Anyways, so that's that. Kimco paying out 28 cents. Comcast paying out 21 cents. We own both of them, so looking forward to those dividends. And tomorrow, ISM manufacturing numbers. You also got construction spending. Later on in the week, we get the unemployment rate. That'll be a market mover. That's on Friday, actually, but that'll be a market mover there. And we also had the Fed recession rate probability index coming out tomorrow, right? Yeah, tomorrow. All right. Well, sorry about the mix-up here this morning. I will take your questions if you happen to have any, and then we'll wrap it up. Amazing how the media is going through the impeachment thing. Yeah, it's political. Did you see Bernie Sanders' new tax on the rich there? I believe that came out after lunch today. Sort of interesting. Tax the rich. Oh boy. Ed says we're going into a recession in 4 to 5 years. That's your prediction. I like it. There is currently, the Fed themselves say that there is a 31.48% chance of a recession in 2020. And Yandri says 2021. All right. Hey, in the meantime, what are you going to do about it, right? Get in there and invest. Find some ways to get your dough straight. If you're really picturing a recession in the next few years, let's say it's anywhere between next year and 3 years from now. Well, wouldn't this be the time to get your debts paid off, get your savings as much as possible, build up as much cash as you can, drive some old beat-up clunker of a go-kart if you have to, save a bunch of money, right? So that when you get the chance and there's this recession everybody's waiting for, you get a chance to spend some dough, right? You get to buy the car you want. When nobody wants to buy a car, you get to go buy the property maybe. If you're a real estate investor, invest in the stock market, things like that. I love it. What's the best breakout area for Tapestry? Well, it's tough to call that a breakout. Tapestry is, I get it, it's consolidating a little bit of a range there. You just kind of hope that continues grinding higher. If it does, it's an interesting technical play because what happens, all the people that watch this bounce off lows, you know how I say sometimes, don't try to pick the low, let the stock bounce first and then see how it settles before you dive in. Well, everybody that follows that methodology, and there's a lot of them, they're waiting, they may not get any kind of a pullback to work with. It looks like this is trying to move above these highs and continue. If that's the case, you're forcing more money in faster than you normally would, which is a good thing if you happen to own Tapestry. But that's pretty much all you can say there. I mean, I don't know what else to sort of offer in terms of that. Looks good. Yep. Sorry if I missed some of your questions there. I'm playing catch up. Save as much money now so you can buy the real discounts. Exactly. I am a huge fan of just saving. Like, I'm a retirement guy, right? I'm here, I wear the shirt every day, we do the show, we hope you open your retirement accounts, all that great stuff. But at the end of the day, I'm just going to tell you to save what you need to save. We're going to work out the numbers, figure out everything you need to do, and that's the path that you're on. Take your extra dough and save it, right? Don't worry. Don't let some other advisor tell you, now's the time to buy the market and all this stuff. Save your money, right? When the markets fall, let's go shopping. Let's turn this channel into how we're buying discounted stuff. I mean, that's the opportunity, especially if you're younger. You get a few of these opportunities in your life. You can either choose to be scared of the recession or say, this is my opportunity. Like when the markets fall or even housing takes a break or anything, this is my chance to have prepared for this so that I can go set myself up for the rest of my life, right? That's the way to look at it. And there will be a pullback. I mean, it could come tomorrow. It could be a couple years from now. Who knows? But prepare yourself, right? Get yourself ahead there. Don't fall for all this stuff where people tell you, save as much as you can so you can buy a winery when you retire. Nobody's doing that. You can buy a flight school. I'm like the only guy that may do that when I retire. I don't know. How long do you have to own the stock to qualify for the dividend payment? You just got to own it before the ex-dividend day. I did a video on this. I thought about touching up on this video again because dividends come up a lot. When I report to you the stocks that are paying out, it's not the day that they're paying out. It's ex-dividend date. So if you own the stock prior to today on like Comcast or Kimco, that's when you would now be entitled to the dividend, right? It's also the day that the stock price adjusts to reflect the dividend. So it'd have to be before the X date. If you want to really go nuts, the way they teach brokers and stock traders and advisors and stuff is DERP, D-E-R-P. So I did a video, I think the title is What is DERP or something, dividends there. If you want to really geek out on it, it's all done automatically for you these days. You don't have to know the dates. Used to be done old school. Jason says, I wasn't ready for 2008, now I'm ready for one. Same here. We'll go through it together because I remember thinking in 2008, I watched like Southwest Airlines, General Motors and things, and I'm like, Ford, these are like discounts of a lifetime. But what are you going to do? Like if you're not ready for it, all you can do is stare at it. So I'll be with you. Yep. Hey, how do you invest today since prior to recession? Should I hold on to cash, pay off your mortgage while I wait for a recession? You should only invest what you need to get to your goal. We're never going to change that, right? So if you have to invest $5,000 a year or something to hit whatever goal you have for retirement, then that's all you invest. You can choose to do it little by little, lump sum invest if you want, or however you want to do it is fine. But that money is just earmarked for investing. You don't care where the market's at. You just do your investing. You can dollar cost average. If the markets fall, of course, you can raise your deposit to buy a little bit more on a discount. Nothing wrong with that. But you don't wait, right? That money gets invested as you can. The rest, then you move on. Then go on to saving your money, paying down your debts, of course, right? Reposition, get a smaller house, get a cheaper car, do all this stuff. Get yourself set up for eventual recession. I love it. Yep. Now, if you're going to keep your home, like you mentioned having the mortgage there, if you're going to keep your home and your ambition is to start a business or buy a rental property or something, then chances are it doesn't make sense to pay off your mortgage. I know the debt people are going to kill me on this one, but if you're paying 3-4% for a mortgage, maybe less, I mean, come on. It's like free money. Save your cash, make 2% on it or whatever you can if you're really trying to do something else with your money. It just depends on your situation. That's why I don't do general videos like that where I go, this is what you should do, because everybody's a little different in that respect. Yep. Henry says, it's too young for a dividend. Most of the stocks are growth. Go big or go home. Thanks, Henry. Good comment, by the way. If you're young, don't invest for dividends, right? If you are young and you have a smaller balance, you're just getting started, you want that money to grow as much as possible. Who cares? If the markets fall, whatever, you'll buy more, right? But you want that money to grow as much as possible, whereas dividend stocks are slower. I get so many people that start off and they're like, dividends, man, I want passive income. And I have to break it down for them to say, you have $1,000. If you make 4% on your account and it doesn't move, you made $40 in passive income for the year. After taxes, let's call it $38. I don't know. Is that okay? And then people go, oh, crap. No, I don't want that, right? I want to grow my money. I love it. Good comment. Yep. No, we're not talking about NEO. Come on. They raised a bunch of money the other day, by the way. They say they're cutting costs and everything. I think they raised like $200 million. Nope. Nope, nope, nope. I don't like that one. A lot of competition over there. Yeah, I won't get started on that one. I love it. Let's see. Did Tapestry stop paying the dividends? No, they don't pay for a while, actually. I think you got a while to go on that one. Last payout was on September 4th. Yeah, so that's it. If you just bought it, you're a ways to go still. Yeah. All right. Well, I'm sorry for the mess up here today. I'm going to try to figure out how to make this all automatic. It used to be automatic. Now I have to hit go live and all this stuff. But we'll be back tomorrow, of course, to do this all over again. Thanks for watching. If I impressed you at least a little bit today, maybe you'll hit the subscribe button. I appreciate that. And we'll talk to you guys tomorrow. Enjoy the rest of your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.